Let's take us to our talk of the tape, the road ahead for this rally. Let's ask our panel. Ayako Yoshioka is Senior Portfolio Manager with the Wealth Enhancement Group. Liz Young-Thomas, SoFi's Head of Investment Strategy. And Bryn Talkington, Managing Partner with Requisite Capital and a CNBC contributor. Ladies, good to have everybody here. Aya, I'll turn to you first since you are sitting here at Case. I love your notes. I mean, you say what's not to like in this market. That's really how you feel?
Absolutely. We're at all-time highs here in the markets. The economy is doing really well. We had a great jobs report. Inflation was a little warm last week, but, all in all, you have the Fed cutting rates, the Fed focused on growth, and the biggest issue is probably just valuation.
All right, so let's kick this around more, Liz. Is that how you see it? What's not to like in this market? Because we've heard a lot of concerns from people. The market's been thrown a lot, and it's dealt with everything.
Yeah, it has dealt with everything. I think there is a lot to like, obviously, in the optimism that we're hearing from investors and that we're seeing in the stock prices. I think the biggest thing to like about it right now is that tech isn't necessarily the one that has to lead the way in order to raise prices. I remember not too long ago asking a lot, can the market go up without the Mag 7? And now I think we're proving that it still can go up. The difference in this period right now is that investors just have to get used to a different clip of how quickly it will go up. So perhaps we're not going to see double-digit returns every few months like we've been seeing, maybe more normalizing in the size of returns. But I think that's okay. And with earnings growth normalizing as well, I think this sort of period where we're coming back down to earth, both in inflation, in demand, in earnings growth, in stock price returns, is healthy for this economy.
Mm-hmm. Bryn, it really has been a resilient market. Feel like you'd have a big day, you'd set a record, you'd take a breather, you say, well, what happens if this happens? And then the market just deals with it and keeps chugging higher.
Yeah, the market continues to punch above its weight, right? You would think that after all we've been through the past few years, we wouldn't be where we are now. But I think that we've had earnings resiliency. I'm a big proponent of don't fight the Fed. I think the direction of rates are lower. The speed and the velocity, not so sure about. I think today's a good example. You have like a hiccup in energy for geopolitics, a hiccup because of ASML, but I don't think those two even remotely derail anything. And I think that at the index level, until the election is over and we can confirm gridlock, I think at the headline number, we're not going to do much. But I think underneath the surface, we're going to see the haves and have-nots. Obviously, ASML is a have-not today, but I think we're going to see a lot of volatility on both sides as these companies announce earnings across sectors.
How are you, Aya, thinking about positioning within this market? We're sitting here, feel like we have this debate and conversation every day. Where best to position in the market? Stay with the mega caps, overweight, or do you believe in the broadening? Do you go small? What's your thought?
I think you've got to have a little bit in everything. So I don't think you can, not have some of those leaders. Tech has been a leader, and it's likely to continue to be. But having that broader participation across markets is always really helpful. And, the economy is strong, and so you want to have those horses that reflect that strength in the economy.
When you say the horses that reflect that, I think we'd hear from people, well, that means stay large in the cap space. How would you address that?
So I think when you look at the economy, over 40% of the economy is still sort of small businesses. And so I think you want to be able to have that reflected in some of those small cap names that, everybody knows the quality of some of those small caps aren't what they used to be. But I think having some exposure there is really helpful. And then same with international and emerging markets. You want to have some of that exposure just in case leadership does change at some point.